Are you tired of feeling lost when it comes to Forex trading? You're not alone. Many traders jump into the market without a solid plan and end up making mistakes that could have been avoided. But here's the good news. You can change that today. In this guide, we are going to walk through how to build a Forex trading plan that actually works step by step. The first step to creating a successful trading plan is setting clear, achievable goals. Without a goal, you're just guessing. Are you looking to trade full-time? Or are you trying to supplement your income with part-time trading? Whatever your goal is, write it down. It's crucial to have a clear target so you know what you're working towards. Be specific. Do you want to achieve a certain monthly profit percentage or grow your account by a set amount? The more defined your goals, the easier it is to build a path to success. Next, we move to understanding your risk tolerance. This is one of the most overlooked aspects of trading, but it's essential for long-term survival in the markets. How much are you willing to risk per trade? Are you okay with losing 2% of your trading capital on a single trade, or does that make you nervous? Your risk tolerance will dictate your trade size and how much capital you allocate to each position. It's important to be realistic. Take into account your financial situation, the amount of time you can dedicate to trading, and your comfort level with risk. Once you've defined your goals and risk tolerance, it's time to move on to money management. A solid trading plan always includes a set of rules for managing your money effectively. A general rule of thumb is to never risk more than 2% of your total trading capital on any single trade. This ensures that even a series of losses won't wipe out your account. But money management doesn't stop there. It also means knowing when to take profits, when to cut losses, and how to scale your trades based on your current performance. Now let's talk about strategy testing. No matter how solid your plan is, it's useless without a proven strategy. Whether you prefer scalping, swing trading, or day trading, you need to test your strategy under real market conditions. Start by backtesting your strategy using historical data to see how it would have performed in the past. Then, move to a demo account and trade in real time without risking actual money. This will help you build confidence in your strategy and refine your approach without the pressure of losing real capital. The final step in building your Forex trading plan is consistency. No trading plan will work unless you follow it consistently. Stick to your rules, even when the market is tempting you to break them. Keep track of your trades, analyze your wins and losses, and make adjustments to your plan as necessary. Forex trading is a journey, and it requires patience. But with a solid plan, you'll start to see the results over time. By following these steps, you can build a Forex trading plan that works for you. Set clear goals, understand your risk tolerance, manage your money wisely, test your strategy, and stay consistent. When you take a structured, disciplined approach to trading, success is within reach.